Welcome to the Silent Trading channel. Today I'll be analyzing the gold chart and updating the gold chart for you guys on Friday the 6th of February to see whether right now is the price action on the bullish side or the bearish side, right? First we'll start by looking at a 4-hour candle or 4-hour time frame, but before we start, please leave a subscribe, like, comment and share if you like this video to support me in my trading journal and to support me in my guiding you guys on how I trade. I'll be sharing all my experiences, all my knowledge with you guys. If you guys are keen to watch, if you guys stay tuned, because I'll be posting videos after videos guiding on how I trade, what I use to trade, and what criteria and conditions that I enter a trade, right? So right now we'll be watching the 4-hour candle first. Why is my priority is always the 4-hour candle? You know why? Too low of a time frame means there will be too much noise in the market, in the charts, right? Too much noise can sometimes disrupt how you analyze the chart because there will be too much ups and downs. There will be too much pullbacks. You're not going to be able to make good decisions based on trading, right? And based on the lower time frames movement, because too much noise means too much disruption, and too much movement means if you're not able to analyze in detailed sense, right? If you're not able to analyze every bit of information the chart is showing you, you will not be able to trade accurately, right? You'll not be able to trade accurately on the lower time frame, which is why I use the 4-hour time frame to analyze my chart and to enter a trade, right? And the lowest I could go is actually on the 1-hour time frame, but the 4-hour time frame is the safest one to trade because it is in the middle. It is right in the middle of the lower time frame and the higher time frame, right? So the time frame that is right in the middle of the lower and the higher time frame, it is actually a mix of both lower and higher time frame, which means the buyers could always be I'll say it will be in a way that they will have both the buyers from the higher time frame and the lower time frame mixed in it, which means by entering a trade on the 4-hour candle, or at least the 1 hour, right? The 1 hour or the 4 hour means that you could at least accurately enter a trade based on price action from both 1 and 4-hour candle, because the time frame that is in the middle of all time frame would always be the best to enter a trade, because it will have a bit of movement, right? A bit of movement mixed up from the lower time frame and the buyers from the higher time frame telling you which way to go. So if you trade using the middle sense of the candle, you'll be able to trade more accurately, right? So right now, as you can see, the 4-hour time frame has right now create a reversal, right? After sideways down for some time, right? As I said, if the chart is going into a sideways down, we are never gonna be enter a trade. And you can see when the chart is going into a sideways down, what you see always happen, because if it goes into a sideways down, it means that the chart is going down at least until it can dump on the price, right? And if it dumps on the price, meaning it dumps buyers, and after it dumps buyers, also meaning that it clears off buy volume. After clearing off buy volume, this candle pullback over here, right? This candle pullback, and then the reversal is created, right? And this reversal was first created successfully because a green candle was created, right? Which means this candle is created successfully. But this reversal or this bullish price action was completed on the third candle, because the second candle went all the way up and then pull back, right? The first candle push up, but wasn't able to touch resistance, wasn't able to start accumulate sell volumes, right? Then the next candle create a bottom wick and then pull back and then push up all the way to touch the resistance over here, accumulating sell volumes, right? And after the chart has accumulated sell volumes, right? After the chart has accumulated sell volumes over here, right? Sell volumes over here. The chart then push all the way up to clear off sell volumes from here, right? So people entering a sell position from this resistance over here got stopped out up over here, right? Because the chart touched resistance at about 4856, right? And went all the way to create a high of 4902, about 4 to 5,000 pips. And this 4 to 5,000 pips is enough to pressure, right? Is enough to force sell position holders into closing their position. And after sellers closing their position, the chart then pull back. This candle then pull back, right? And why does it pull back after people close their sell position? Because in every aspect, in every movement of the chart, there will always be people, right? There will always be traders buying and selling. It only depends on which side are more on the market, right? If there are more buyers on the market, the big money is gonna dump on the market to clear off those buyers. If there are more people selling on the market or shorting the market, the big money will then push the price up to clear off the sellers, which means once the price has pushed up to clear off sellers from this resistance over here, right? The sellers accumulated from this resistance was clear off at this high wick over here and then pull back. This pullback is also to clear off buyers from panic buying, right? Because the chart push up. So buyers who are into panic buying will start buying, right? And when buyers start buying, the candle then pull back and clear off buyers. And then the next candle push down, creating a bottom wick and clearing off buyers, but wasn't able to push down to touch support. And if this wick pushed down, this wick was created by not touching support, which means buyers isn't in the market yet, and then the candle start pulling back up, right? This candle pull back and then push up. And this push up indicates a complete reversal. Why? This push up indicates a complete reversal because it was able to close above this resistance over here, right? So by this candle closing above this resistance, the next candle then creating a bottom wick, right? A bottom wick was created by not touching support, and then the candle start pushing up again, right? So every time if a bottom wick was created by not touching support, means the market isn't accumulating buy volumes. If the higher wick was created by not touching resistance, which means sellers was not accumulated in the market, right? So touching resistance means triggering sell limits, touching support means triggering buy limits, or triggering buyers into market execution buying at support, or accumulate by tricking sellers into entering sell position by market execution at resistance. So every time resistance is touched, there'll be sellers in the market, right? Every time support is touched, there'll be buyers in the market, which means if the price action is bullish, and every price action that is bullish, right, when the candles start pushing up, every wick that is created by not touching support is a legit bullish price action. Why? Because a created wick not touching support means not triggering buy limits, means not accumulating buy volumes, and then start pulling back and then push up, which means price is going to start pushing up again and again, at least until the next candle or whatever candle that could be start to push down, and then the lower wick start touching support. And by lower wick start touching support means that the price is either gonna go up a bit further before reversing, or the price can start reversing at the support that it touches, right? Which means every time the market touches support, buyers are into the market, because touching support means buy limits are triggered, right? And also means that people waiting to buy will buy at support. So every time the price touches support, there will be buyers. There can be as many buyers as can be, or there can be as fewer buyers as can be, but there will always be buyers waiting at support, be it a normal support, be it a key level support, right? There will always be buyers. The only differences is that there are little buyers for the market to dump on, or there are too much buyers so the market needs to dump on. When one support is touched and there are too many buyers in the market, the big money will dump the market down, right? But if the support is touched and there are too little buyers in the market will just do a candle pullback and then push up, because a few buyers doesn't affect the market. But if there are too many buyers waiting at a support, the market will then start pushing down to dump on the buyers before pushing back up again. Which means the principle of all this is that market always has a way and tends to clear off both sides volume or both sides liquidity, right? Liquidity is always clear off from the market, no matter on the sell side, no matter on the buy side, right? You can place your buy limit here, you can place your stop loss at this wick over here, right? And then you can place your sell limit at this resistance over here, you can place your stop loss at this wick over here. The market has both way of going to your buy limit and clearing off your buy volume, and then pushing up to trigger your sell limits, and then going to your stop loss, right? So the market always has a way of clearing off market orders, be it a limit order, be it a market execution. As long as there is stop loss, the market will always clear off your orders before going further. So that is why we are looking to see if the market has started to accumulate orders, accumulate volumes. If the market hasn't started to accumulate buy volumes and the market push up to only accumulate sell volumes, we are only going to be entering buy volume at the next candle bottom wick creation, right? The next candle bottom wick creating, by not touching support, it is where we're gonna buy. And if the candle pull back and then push up to touch resistance, touching resistance means accumulating sell volume, and accumulating sell volumes means the market will start pushing up further, which means your buy position from the bottom wick creation is a legit order, right? It's a valid one. You can still hold it until it start reversing at which point in the chart, right? So right now, I'll say that the price action right now is bullish. We are only gonna be entering a buy position, but you need to be watching this candle over here. This candle right now has to at least close above both of this wick. Why is it so? Because every candle has its own duty. Every candle has its own job to do, right? The reversal, the candle after the reversal always has to close above resistance, and by closing above resistance, we know that the next candle retracement or the next candle bottom wick creating, we're going to buy at the bottom wick of the next candle, right? And then if the price push up, we're going to be closing our position and taking profit. But if not, and the candle start reversing, we're going to be in a loss. We're going to be needing to manage our position, which means every candle can change its own price action at any time and anywhere, right? Which means no matter this price action, however strong this price action is, you can never stop the chart from reversing at this point in the chart. The chart can still reverse from here. This candle that can pull back and then push down to touch support and then push down all the way. It can still happen. But don't be putting your hopes in all of this candle and waiting for it to go all the way up or waiting for it to go all the way down. You need to be able to analyze each and every price action the chart is showing you before entering a trade, before closing a trade, and before not entering a trade and waiting for the right price action to show, and then you can start entering a trade. If not, you're never gonna be entering a trade based on emotion, based on what you think it is, because the chart is never gonna do what you think it is. The chart is only doing what it is doing. If it is showing you the right price action, it is gonna be doing that way, but it is also going to trick you into doing the other thing around. It is gonna trick you into doing the opposite. So when you enter a trade, never be biased on yourself. Never be biased on your emotion. Try to understand what the chart is showing you and do it according to the chart, right? So right now I'm gonna be playing on the bullish side, but I need to wait for this current candle to close above its own wick, the previous candle wick, and that is when the next candle retracement is where I'm gonna buy, right? So for today, that is all I'm gonna be analyzing for you guys. So stay tuned to my video tomorrow. I'll be analyzing more and more. I'll be revealing more and more. So please stay tuned and wait, and you'll get all the best from me. So for today, I'll see you guys tomorrow. See ya.